Hey, welcome to the 40 Finance channel, everybody. Well, if you're a PayPal bag holder like me, then this past week has not been good news. Stock's taken another leg down after what seemingly wasn't that bad of an earnings report. So today I'm going to share some things that I noticed coming out of this PayPal earnings report and kind of speculate on the stock going forward. What are the bad things that are weighing this one down? What is the potential for the future? And what are my plans in terms of the bags that I'm holding with PayPal? What am I going to do with my shares looking ahead this year? Now, before we jump in, I do want to call out something very important. The SeekingAlpha Premium Special offer that I've been promoting over the past few months, it is coming to an end very quickly. May 21st or May 22nd, the $99 for 12 months offer is ending, and then it's going to go back up, I believe, to $250, something like that. So if you're interested in learning more about SeekingAlpha Premium and getting a free trial on the front end plus the $99 discount, then definitely check out my affiliate link in the description. This is a great stock platform that I use every single day. All right, so PayPal, here's where we are right now. $63 here on Friday morning. Over the past year, this one has sunk 15%. Over the past 5 years, it's down 20%. So shareholder return is a major issue right now, particularly when you zoom out on a 5-year plane. Now, obviously, the environment of the past 3 years or so with COVID and then coming out of COVID, it's been a very interesting time for anything related to e-commerce, and PayPal's made significant gains in their business over the past 5 years. However, if you're a shareholder, or should I say bag holder, then you really have not seen any of those returns if you simply bought and held from the last 5 years, and that's a major concern going forward. But let's talk about this most recent leg down that we've had here and where it all came from, because if you really just read the headline coming out of earnings, it wasn't that bad. But when you dig into it, this is from a Credit Suisse analyst who actually downgraded the stock after earnings. It gets to the crux of the matter of what people are actually worried about. And you see right here in the opening paragraph, the stock dropped 10% in Tuesday pre-market trading after the tech company reduced its 2023 operating margin guidance to at least 100 basis points from its previous expectation of at least 125 basis points. So here's what we're talking about headline-wise. We're talking about operating margin. We are not talking about revenues. We are not talking about earnings per share. We'll get to that in a second. We're digging in deep, or this analyst in particular is getting way into the weeds on this one, and it's been enough to rock the stock here early after earnings. During the company's call, management said operating margin expansion will be lower in the second half of 2023 than it will be in the first half. Its operating expense decline will be lower in 3 and 4 than it was the first 2 quarters of the year as it laps the beginning of its cost savings program. So PayPal obviously started to buckle down like so many other companies in the second half of 2022, but when we enter the second half of 2023, the gains or the percentage impact that those cost savings are having are going to be minimized more because they're just lapping what they did or the process that they started last year. Next, you get into this analyst, the Credit Suisse analyst, downgraded to neutral from outperform, even though the company's Q1 earnings suggested at least stable trends in branded checkout growth, which is very interesting, right? Given the prospects for continued transaction margin pressures throughout 2023, PayPal's vertical skew, which is consumer discretionary, in an uncertain macro backdrop, being the economy, pending management decision, which is the CEO, Dan Schulman, who is retiring at the end of the year, and they still have not named who will take his place, and increasing competitive pressures over the long term, we find it challenging to recommend the shares at this time, the analyst wrote in a note to clients. Now, even though this is just a summary of what one analyst thinks, I've done enough research so I can tell you a lot of these worries are weighing on the rest of the market when it comes to PayPal. And really what we have here is a stock that is just flat out stuck in a rut, and the negative sentiment continues to build even though the bottom line performance is halfway decent. All right, so let's talk about that performance, and here's the bullet points from SeekingAlpha. Q1 non-GAAP EPS of $1.17 beats by 7 cents. Good news. Revenue of $7 billion beats by 50 million. Just came in under a hair, but that's still good. They are still growing, plus 8% year over year. The company attributed the growth to a strong growth in e-commerce and cost-cutting initiatives. Total payment volume, $350 billion versus $323 billion a year ago. So total payment volume, hey, listen, they didn't knock it out of the park, but they are making gains in an environment where I think we all know consumer discretionary spending is peeling back just a little bit. Transactions overall grew 13% to 5.8 billion. So that is a good line item as far as I'm concerned. Transactions per active account, 13%. So the core users who PayPal is targeting now, they're not going after account growth. They are focusing on getting the existing accounts to use PayPal more. And you did see that, at least that initiative play out here at plus 13%. Fiscal year non-GAAP EPS now expected to grow 20% to $4.95. That's up from the prior guidance of $4.87. So they actually pushed up their non-GAAP EPS projection from $4.87 to $4.95, and we still have 6 months or so left in the year when it comes to financial reporting. So I could easily see this being a 5 by the end of the year, and it's exactly the kind of thing from a fundamental standpoint that you want to see from a company, particularly in these troubled times, right? When there's a lot of pressure on the economy, here's a company that's raising their EPS projections, and their revenue and transaction volume is growing. So it's not a complete cluster that we have here with PayPal, but the worries and the sentiment are really holding this one down. All right, let's take a quick view of some of the fundamentals over the past several years, starting with EPS, and we go down to this table view, and we want to look at EPS actual. So if you go back, we were looking at that 5-year chart of shareholder returns, right? And if we go back to 2017, 2018, whatever you want to pick there, you're right in that $2 to $2.50 range of what they had as far as EPS per share. Now, at the close of 2022, they had $4.13. So they have made progress there for stock that hasn't shown much return overall. And in 2021, when every stock was doing well in the economy, they actually hit $4.60. So if 2021 was the peak from an EPS standpoint, now they're projecting $4.95. And again, I wouldn't be surprised if that hits $5 this year. The pressure is much more on the bears, in my opinion, and they're winning. Let's be clear, they are winning right now, but PayPal is still beating the results, or they're projected to beat the results that they put forth in 2021. How about revenue? Let's go back again, table view here. If you're in 2017, 2018, the company was generating $15 billion in revenue or so. Now we're up to $27.5 billion as of last year. And this number is expected to grow again this year. So it's a very, very interesting stock when you think about the 5-year returns. All right, let's switch over to growth, because the one thing that we know for sure from 2021 peak across the stock market to today is that companies simply aren't growing at the same clip. The darlings of the stay-at-home era are losing momentum as we return back to normal, right? And that's fair. So if we go to PayPal and we think about revenue growth forward, all right, and we'll use this SeekingAlpha chart, which I like because it compares to the 5-year average for a lot of the popular fundamental metrics. So let's see here. Revenue growth forward projected 8.38%. Oddly, that's very similar to last year's 8.7% growth. In the past, or the 5-year average, you were about 17% growth across 5 years, okay? So we are minus 50% off of that pace. So we know we're not going to get the same valuation multiple that we would have got, say, back in 2021, because right off the bat, the growth rate on revenue is 50% less than it has been to the average. Now, what about our EPS? If we go to, EPS diluted growth forward, 7.29%. Again, it's positive, it's single digits, but it is positive. And that is 61% down from the 5-year average of 18.9%. So arguably chopping some of these numbers in half from a growth rate percentage, but it is still growth. Okay, so there's plenty of companies out there right now that are contracting. They don't have any growth. They are going back to pre-2020 levels in terms of revenue and EPS. That's not the case here with PayPal. Okay, now switching from growth metrics to valuation multiples. Let's see where we stand. All right, PayPal typically reports in non-GAAP PE, okay? All their numbers that you see on all the different websites are almost always non-GAAP PE. So that's what we're going to do here. The forward non-GAAP PE, right now that multiple is about 13, okay? So that's what investors are paying if they buy today. They're paying 13 times the forward non-GAAP earnings per share estimate of about $5. So across 5 years, the multiple has been 37. So that's the big chop that you're going to see. The EPS isn't going down. The multiple that people are paying is going down. And some of that makes sense just because of the environment that we're in. The other half makes sense because PayPal's growth rate, right, is down about 50%. So with that, if we were going to take the 5-year average and we chopped it in half, you're probably at about an 18, okay? An 18 or 19x on your multiple. So in my opinion, if we were to recover to a fair multiple, given the slower growth, the economic setup, all those things, you'd be at about 19 times. We know that the estimate's about $5 a share on the EPS line. That gets you a price of about $95. Okay, so if I personally, in my opinion, was going to assign a fair valuation for PayPal right now, I would say $95. Then if the economy turns and or we get some relief from the Fed, then you should expect multiples to increase. So what if multiples went up to, say, 22 or 23 times the $5 bottom line? Then you're at $115. And that's probably not going to happen the way things are looking from an economic standpoint. I don't see that happening in the summertime, but when we get into fall and we get into e-commerce season, which is of course Q4, you could start to see that multiple expand. And it doesn't have to go to this number. It doesn't have to go to 37 times, okay? You have to get, though, probably into the 20 range to start seeing significant gains from where it is today. Okay, now what about my shares? Like I said, I'm a certified PayPal bag holder. I have 100 shares at a cost basis of $160 some. I think it's 161. All right, I'm in deep trouble. All right, this one is not going to go back to $160. I can't imagine even close here in 2023. And at the pace we're on, we're probably looking at 2025, as well as an economic turnaround to get there. However, with the 100 shares, I could make a couple bucks off of options, probably not nearly enough to impact, the money that I'm losing just hanging on to this. But from a good news situation, if we project out, okay, so I've been using $5 here, all right, as the EPS estimate. If we got back to $90, right, just to recover some, and that would actually, I believe, $90 would be the high for the year. I think it's been treading water in the 70s for quite some time now. And then we start talking about 2024, seems far away, but here we are in the 5th month of the calendar. Everybody's going to be talking 2024 in October, November, right? Particularly when holiday shopping gets going. So let's just say the Fed goes away, doesn't necessarily reduce rates, but let's just say they shut up for a few weeks, maybe, if we get lucky. Let's say that the CEO hiring, which they need to do by the end of the year, let's just say that is a home run, whoever they get for that position. And let's say they do what they say they're going to do, PayPal that is, on their EPS and revenue projections. If those things were to happen, now you're starting to talk about maybe a 25 multiple, and looking ahead to 2024, because we're always using the forward PE, then you're starting to multiply 25 times 568, maybe kind of sort of you're getting in that 125 range. In that situation, I could probably recover, let's just call it the majority of my money, and book a tax loss heading into tax season. Whereas if I sell right now, I'm not really solving any problems for myself. All I do is just book an absolute loss. And I think one thing we know about some of these earnings reactions, the worst time, if you get a negative reaction and a negative sentiment, it's always the week or so after that sentiment comes out that it's the worst time for a stock. So to me, this is the worst time to sell. Should you buy at $62 here? Would I advise anyone to buy? In my opinion, I don't think there's a hurry, and I think there's other more attractive stocks out there. And I think particularly, as I've said many times on this channel, I like the Qs, QQQ. If you're going to go bargain hunting, so to speak, for the long term, you'd have to think about a more broad ETF, just because the future is so uncertain, particularly for these individual stock stories. If you fancy yourself an individual stock picker, then small and medium cap stocks, there's a lot of value to be found there if you want to place your bets. But for me, in these uncertain times, I am sticking with the Qs, as I've talked about several times over the past year. All right, guys, so that's my PayPal bag holder summary coming out of this most recent earnings. It's a tough time for PayPal shareholders. There's no guarantee that things are going to get significantly better over the next couple months. That being said, I don't see a ton of reason to hurry up and sell today. The fundamentals per the share price are strong here. There's a good case to buy from a value standpoint, but when will the dark clouds pass? Could be looking at later in the year heading into 2024. Before you go, don't forget to check out that expiring Seeking Alpha Premium offer, $99 for 12 months. My affiliate links in the description. Hope everybody's doing well. We'll see you on the next video.